So earlier we did episode 5. This will be episode 6. This particular episode is going to go over some terminology pertaining to the capital markets and help people get a little better understanding of some of the fundamentals pertaining to the float, some of the outstanding shares, and some other terms that we'll go over. So let's dive right in. Hopefully this will be a very quick video. This may not be helpful for some that are a little more sophisticated, a little more experienced. Okay, so this is going to specifically discuss outstanding shares versus the float and the authorized. So the authorized is essentially the treasury, how many shares a company can issue. The outstanding shares are how many shares has the company issued. That's why we call the outstanding shares the issued and out. That's a term you might be familiar with. And there's just a number of shares that we've issued, and it also can include shares that have a legend or restrictions on them for whatever time period it may be. Rule 144, for those who don't know, for fully reporting companies or SEC filers, it's 6 months. For alternative reporting pink companies like us, until we complete our audits, it's 12 months. So that's their restriction period typically assigned. The outstanding is not the float. I've gotten this a few times. I understand some of the confusion, but the outstanding shares is not the same as the float. The float is what is actively being traded on a daily basis, what's in the market, what's able to be bought and sold. That is the float. They do not have a legend. There's no restriction on that. So that's what's available in the market to either buy or sell. So here's a question I get a lot. Is a higher float better? Is lower float better? So let me just say this. On a higher float, it's a little more predictable, right? A higher float is going to be less volatile. It's going to be much more difficult to manipulate. And as many people don't like talking about this, it does happen, right? So the liquidity can absorb larger trading swings when you have a larger float. And that movement, when you have a larger swing or a larger movement in trading volume, if you have a larger float, you're going to have smaller swings is the best way to put that. And that's why it's a little more predictable and less volatile. It also equals more liquidity, right? So because you have more shares in the market being traded. And then, of course, you're going to have these lower spreads, and as a result, it's more difficult to manipulate. So then a low float's bad, right? Not necessarily. The trading can potentially be more volatile. Smaller trading volume can produce larger swings. Obviously, that's where the volatility comes in. And then you'll also have these higher spreads. Now, there's a lot of theories and different schools of thought on what that is. I've always viewed that as not helpful. If the tighter the spread, I feel the healthier the stock. That's my opinion. I'm not asking you to adopt that ethos or that philosophy. I like something that's a little more predictable, and we've worked very diligently at creating something that's less volatile and that is within a very tight spread with more organic movement. And for wherever you sit on that, because there was a period where we weren't putting out news, I didn't want things manipulated, and I wanted to make sure that what we put out was valid and was real and can be counted on. There's been some shortcomings here and there, of course. We've fallen short on some projections, and that's, I think, is expected. I know some people take me to task on that. I'm thick-skinned, I can take it. But understand that in business, things don't always go the way you think they're going to go, or even when you plan, or even when you're working towards things happen, like a global pandemic, for example. Not that that was always the issue with us. We've had some shortcomings and some miscalculations. So I view a tight spread as better. Some people look at the volatility as a plus, especially if you're a trader, right? You can either trade gold or silver, but you're going to make more. You can be in and out of the silver market quicker because of the volatility of that, and that goes for any stock as well. I know one thing is a security, the other thing is commodity, but the principle is the same. Okay. Here's the deal with a low float. It can be very challenging to have an entry or exit into that particular investment. So if the stock's not trading and it's a lower float, You may own stock, but you might not be able to sell it as easily. Does that mean you can't sell it at all? No, but if you want to sell 1 million shares, you might only be able to sell 100 blocks of 100,000 at a time. That can affect your RI or what you're looking to do, whatever your objective is. So it can be a little more challenging in and out. Of course, there's a supply and demand issue where there are fewer shares available to be bought. That can be an issue. As a result, when you buy larger blocks, there's going to be a bigger swing in price. When you sell, there'll be a bigger swing down. So. And typically with a low float, you're going to have low volume. Typically, again, for those who are more experienced and have decades of experience, you don't need to sharpshoot me. I understand that that's not always the case, but typically speaking, on average, what I'm outlining is fairly accurate. So, where does the authorized come? What does it play into all of this? The authorized is just the amount of shares a company can spend, if you will, right? If you have $100 in the bank, you can only spend $100. Now, I know people are going to sharpshoot me on that as well. There's leverage and everything else. If all things remain equal, that is the limit of what you could do. Now, yes, you can increase the authorized. That doesn't always have to be bad. There's some justification in doing that in some instances, and it depends on what your authorized, your current or existing authorized share count is. Outstanding shares, again, is just what's issued out. What the company has issued has nothing to do with it being the absolute definition of the float. The outstanding will include the float, but it is not the float. So I think I want to keep this video short. I know this might sound very simple to some. I speak with a lot of shareholders, and you'd be surprised how many people don't fully understand that. I get calls every single day. I speak with a shareholder, and I have to say, not a week goes by where the outstanding share count and the float are referenced as one. So it's important to understand that. It's also important to understand the authorized and what that actually means. And you can have a huge discrepancy between outstanding and authorized, and that's something to always watch. So, and there's reasons for that. I think I went over that in our video this morning. You'll see that, and then this one will come after it in a couple days. So hopefully we're 2 and 2 together on that one. Thank you for watching this video. Please like and subscribe and share, the most important thing, so that we can get everyone educated and caught up to speed and everyone understands the same things. Okay? Again, thank you, and I look forward to talking to you in the next video.